Welcome, everybody. It is 5:01. Kind of ran through the list. Looks like we got 7 people in YouTube. Hey, YouTubers, welcome. Now, if you didn't know, you can pop over to jeffrytrader.com/YouTube and rewatch this right there. Jeffrey Trader right there below me. See it? You can pop over there and watch this later on. And if you got to step away, you go pop over there and watch it. I mean, it'll be there. We're live streaming. The replay is there immediately. So this is beautiful downtown Knoxville. The sun sphere there used to be blue. Now it's green. This is the back of the Tennessean. And beautiful downtown. Those 2 tallest buildings built by the Butcher Brothers. TVA building over here. UT Knoxville just kind of wrapped around a little bit. So yeah, that's downtown. Welcome, everybody. We're going to do a little bit of my warning on what we've got set up in the markets right now. We'll, of course, go through your stocks and then give you what's coming next, I guess. So, all right, let's get started, shall we? Let's look at some charts. Welcome, welcome, welcome. If you're brand new here, give me a shout out in the chat. Love to hear from you and welcome you. If you're brand new to me, there usually are a couple people. I've been doing this stock market thing since I was in the 3rd grade. I played the stock market game in elementary school, middle school, high school. Then when I graduated, became 18, opened a real money account. 20 some odd years later, I got into teaching other people how to do it finally. And I hope I'm honest and straightforward with everybody. And maybe I can cut out some of the crap I went through and help you get there. Not from Wall Street, not from any finance degree. I have an engineering degree and I engineer the markets. I tinker, I make, and I make my own indicators and tinker stuff. So I try to help pass that along to everybody else. So, all right. Glad to have everybody. So popping out of here, if I can. There we go. And let's talk about this real quick. Anybody out there know what in the devil this is? We have the 2-year treasury shown in blue. And then we have the Fed funds rate. So anybody that thinks the Fed is in control of this interest rate rise, they got it all backwards. The Fed is always chasing the free open markets interest rates. Chased it on the last run back here in 2018. They chased it on the run before that, back here into the 2008 housing crisis. They chased it back down to 0. Chased it up in 2018, back down to 0. And now we're chasing it up again, which I'm here to tell you right now, this is going to lead to yet another financial crisis. When this orange line, the Fed funds rate, catches up to the blue line, we're in for a world of hurt. So just want you to know, you can load this up on TradingView DGS2 and you can compare it. Just click the little plus button right here, type in Fed funds, FED, FUNDS. Then what you got to do is you got to right click over here and click regular to compare them both the same. It'll pop up this crazy thing. On a percent basis, the Fed has raised the rates crazy, but on a real basis, they're still lagging. So that's the first thing I wanted to point out right there. So this is going to last for some time longer. We're going to keep raising rates. The Fed has to keep raising rates. They're behind the market. Now, to really raise them, need more than a whole point, almost a 1.25 raise just to catch the current market rate. And then what happens when we catch the market rate? Well, it rolls over and then we chase it back down. So the FOMC is always chasing the market. Now, the other thing I brought for you is the S&P 500 right here. It has moved up off the June lows, peaked out, retraced, and for 3 trading days now, we've bounced at this 618 level. We've held it. Now, what I'm looking for is a bounce and a breakup of this level right up here. We'll look at the live chart here in a second. This breakout right here, though, can send us higher to extensions. And let me pop over here and show you those kind of extensions here. Take me 1 second to catch back up. Pop out of the monthly, back to the daily. So we've retraced to the 618 level. Kind of holding it here. Now the danger is that we break through it and keep on going. If we get a trading day that closes down in here below the 618 level at this point, then the odds start increasing drastically that we see an extension to a lower low than we saw in June. I am using a free account, so it's going to pop up ads. That would be a WXY pattern in Elliott Wave speak. We can see an extension to a double bottom and potentially a lower low. Now, if we do hold this right here, and we break back up through that 4,000, say 4,050 level, that's about where my black line was on the other chart. Some blue line on this one. Somewhere around 40.50 right there. We're going to break up through these candles that came down to touch the 618. Yeah, you could say down here around 40.20, 40.30 or so. If we break up through that, odds are we're going to see an extension. And that extension can look like this. Highest high, lowest low, swing high, swing low. And we see 44.50 to, looks like 4,600. That'd be the targets. And that kind of lines up with where I've got this right there. So that one will pop up here for the target area, come up in this area. So if we bounce here, break through 40.50, starts increasing the odds for this move. If we break down below this 3,900 and really start getting daily closes down here, we increase the odds to see this area down here. And it could lead to this down here. You may see a bounce and then a retrace down, extensions lower to this 3,200 area. So that these risks do exist in the market. We're at a kind of a coin flip. Like, which one's going to happen? Well, right now it's kind of a coin flip. It can go bullish. It can go bearish. There's lots of bad news. And what happens when the mainstream media gets overly bearish? The market tends to go bullish. If the mainstream media gets overly bullish, the market tends to go bearish. Everybody was on the hype train back here in August. We're going to all-time new highs. Everything's good. Everything's great. Rally, rally, rally. All of a sudden, I started warning about almost 3 weeks ago now that we had a huge potential to roll over, and roll over we did. We're down now. This was 4,300. We're down to 3,900. So we've seen a 400 point pullback. If you've been listening to me, I hope you were listening to me on the warnings for the pullback. Now we're kind of at a coin flip juncture. We could start rolling higher, or we could start rolling lower. So stick with me, come back next week, and I will keep you updated with the twists and turns along the way. Nasdaq is kind of pushing the limits of this 618 level here. It's got me with a cautionary eye on that one. The Russell came all the way down and now testing the 618 also. So this would be a good point for it to bounce in line with the S&P 500. But if these all three start rolling down lower, and the Russell, if you're not aware, that's the small caps. It's it's more like 1,800 of our smaller cap in stocks out there, and they're the hard workers, the blue collars of the trading world. So as these guys kind of lead the market, and they've been trending sideways for like a whole year last year, and then drifted off into this correction this year. So they were kind of showing us that our rally was coming to an end last year. They're an early warning sign. They've pulled down in here, trying to build something bullish to break back out of here, but I don't know. We could extend lower. So caution on that one also. All right. We also like to talk about oil, the state of affairs. It looks like everybody was excited about the potential breakout last week, but I was cautioning using cautionary, tails here. We may see one more push lower. Looks like we may get it. We're so close. I would hate to see this miss the target. My target's between 75 and 83. If you haven't been watching me for months and months, I've been saying that since April, I think. Looking for this move down to this area. So eventually we're going to push down in there, and then we can get a strong bounce from there and see all-time new highs. Wouldn't surprise me to, after pushing down in this area, if we saw $150 to $200 a barrel. I'm going to be looking for a long in oil if we do eventually push down in this target area and show some kind of reversal to a run higher. So stay with me on that. We're not quite there yet. Now, price of gasoline, getting some relief, right? Finally, a little bit of relief. This move up was kind of corrective looking. Now we've done a deep retrace, but we can find support here and bounce higher. It's not good for all of us that pay money for gasoline, but it also, on the bigger time frame, has opportunity to go a bit lower back to this $2 area. So we could get a little more retrace before we find support. Keep an eye on that one. Gold sure does look like it's going to reach down to that 1620 area I've been looking for a while, and potentially an extension down even lower. 1550 would be a nice place to see a bottoming reversal. So I've been looking for that. From last summer, I think, maybe. I've been telling people 1620 was a good spot for gold to head to. Even this craziness, it didn't break out, and that just reaffirmed that it was probably going to go lower low. Now, keep an eye on that one too. Bitcoin looking a little rough. Mara has one of my favorite patterns here. Measured bounce setup. Same as the S&P 500. Have this 5-wave move up. A nice 618 retrace right there. Potential to get about a move up to $50 or so. That's my target right now. If we can hold this. If we don't hold support around $10, all bets are off. We could easily go lower low than we had back in July. Bitcoin, Ethereum, big date coming up here in 9 days, particularly for Ethereum. Proof of stake merge. If you're not familiar, go Google it a little bit, read about it. It is the end of traditional mining with GPUs for Ethereum. Now, there's risk in the market, and that's why it's being a little crazy and volatile here. People moving money around, placing your bets, making your bets. Is this going to be a bullish event? Is it going to be a bearish event? Are they going to mess up something in the code? I don't know. It is a huge risk for all of crypto right now. They're just messing around with, the almost $1 trillion crypto market. Kind of hinges on what happens here in 9 days. This is going to happen somewhere around the 15th, 16th. It's not a firm date. It's based on a block number that gets mined. And all of a sudden the difficulty flips, and it'll take like 100 million years for the next block to get mined, effectively freezing the chain for Ethereum and pushing everyone over to proof of stake. So yeah, 618 is one of my favorite fib lines. So that was asked in the chat there. All righty. Moving on. That pretty much wraps up my my kind of list there. I did bring a couple to show you. These were on a breakout list. Had CNP here. I don't necessarily agree with the breakout, but they were on a breakout list email I got right before I came on here. Let's adjust the settings here. Turn these off. We've got the roadmap line there, and looks like it's just kind of hovering. Needs a little bit more for what I would call a breakout. And needs to push back up through 33. And then RBA, Ritchie Brothers. Now that does look like a breakout right there. Very nice. Potential to run there. I guess that says restaurant brand, not Ritchie Brothers. Let's see. RBA. No, it's because it's international. That's Ritchie Brothers in the US. And that still looks like a breakout. All right. And then Smucker, getting a little pullback there. That one looks like it's going to come back down to me. All right. LNG, my thoughts. Well, getting a little bit of slam down today based on natural gas. Let's see, where is the future for natural gas? Thought I had it right there. Nope, don't see it. NG1 exclamation point. So that was what happened to LNG. It's a big move down in natural gas. Tried to break higher, couldn't quite do it. Got to retrace. Need to break higher to see higher prices. This may retrace back to the roadmap line one more time here. Right down in there before we can give it another go. It's where it's looking like it's heading right now. That's taking down LNG and UNG. Both getting a retrace. So, all right, SLV, lower low. As goes gold, as goes silver, as goes copper. So SLV is looking for a lower low. All right, let's see. What else did I skip? BE. Looking for the long. Looks sideways to me. It doesn't really look conducive to. It tried to break out and kind of found resistance and been trucking sideways here. Looks like it's going to come down back to the roadmap line potentially. Primary expected to kind of stay in that box zone. But that line may come up to meet it. Somewhere over here. All right. Thoughts on Kellogg's? Well, it didn't make that final move, but it is doing the big retrace. That's big arrow says it all. Couldn't quite make the target up there and retrace back to the roadmap line. Did silver riots? Yeah, so this one didn't quite get up to the roadmap line. So I'm less bullish on Riot. They're carrying more debt than Mara. It doesn't quite have, while it does have a measured bounce set up, it's kind of pushing down through, whereas Mara was holding above. This makes me wonder if it's going to break lower. Didn't quite get up to there. So we saw that on Mara, we saw it push up into that roadmap line and then retrace, and we're holding above that 618 right there. That's 61.8% retrace of the move up. A popular place for a measured bounce setup. And if you're not familiar with that, I'll give you more information toward the end here. Tesla, back to the roadmap line, kind of hanging out right below it. Needs to find support here and start moving up. Otherwise, we can see a move down lower than what we saw back here in June, May, June. Return to this low here. And primarily, I would like to see it hold this area where it is now, or the 618 here. Otherwise, we can see it break on down. All right. It's an EMA for the roadmap line, 144. It's primarily, that's the dark line that you see on there, 144 EMA, exponential moving average. Why 144? Because it is a fib number. All right. 4 is in FOU. Looks bearish, bouncing off. Like, see this right here? Held resistance. Doing it again. Potential extension lower. Down to 23. This thing goes down. NVDA. Yeah, for all y'all that thought I was crazy, look where we are. Just scraping into that target. I saw the comments. You weren't sure it was going bearish. Look at that. I just scooted that target over, coming right down into it. Looking for it to hold support right there around 127 and mount a bullish move from there. So that would be an ideal turning point. If it does break down below 125 or so, it's probably going to visit 110 area, 110, 112. All right, FCEL. Still looking like sideways is the primary expectation. Till it can break out above the roadmap line, sideways is the path. Kind of been chopping in that area for a while now. Tried to break out higher, couldn't do it. Right back into the box. Sideways it is. All right. Support is down here around 330. A, B, and B. Kind of sideways. Stuck in the range here, it looks like. So it can break out over this. It's got one heck of a resistance up there too. It's got to break up through there to get bullish. ENPH. Yeah, that one's finally pushing out of the box here. This can be really bullish for ENPH. Kind of pushed up out, retested, lower high, retested with a higher low. Needs to break above, like a breakout above this right here. Breakout, set your alert at 307. Breakout over that, can see this thing take off. You're looking for minimum 327 and 385 up here. So you don't want it to just stall out right there. We want it to break on out and really get a nice run up to 385. Now, if it breaks support, right now we've got this kind of support running right through here around 273. It breaks through that. Unfortunately, it's probably going to retest all the way back down to 120-ish. Right now, it's kind of the make or break point for ENPH. HUT looks kind of not as awesome. It had 3 waves up. That was a 3-wave kind of move. You could kind of say 5, but it's overlapping and not quite as awesome. Pushing through the 618 down to the 786, not as awesome. This thing looks more like it's going to extend lower, and it does break out higher. BTU, still working on a classic pattern right here. Break up, come back, retest that breakout, push higher, getting a little, if that candle was green, it'd look better, but what we really need to see right now is a move back through that high. Right there. Right up through there, right up through 29. Move right up through 29. That'd be a nice fat long, looking for 37 or even 42. I'm thinking it's probably going to do it too. That's a very bullish pattern right there to break up higher, retest, and move up through there. So beautiful move right there. Looking for it to go. All right. I see BCU, Bravo, BCU, SDT, then show BCU. Man, I can't type. USDT. Let's see if I can get another. Is that Coinbase I tried? There we go. That one's going lower. That's BCU. BCU. I don't see a BCU USD. Hopefully you meant Bitcoin, BTC. But yeah, we could see a extension lower there. So watch out. That's the market cap of Bitcoin. And stair stepping down. All right, let's see. FCX. Yeah, I mentioned copper was kind of breaking down a little bit. Holding the 618 there. That can be a bullish setup, but we came up short of the roadmap line here. Looking like we might get an extension down to 23 area on FCX. All right. ALTUF. Alpha Copper. It's an OTC. Looks like it's got ridiculously low prices that aren't going to pop up properly. Sorry, can't pull that one up very well. GGG. Well, looks a lot like the S&P 500 right there. Holding just above the 618 retrace. That can be bullish for a measured bounce setup, breaking out higher. Looking for that to happen. I would be bullish on that above this little consolidation right here. Otherwise, I'd watch out for this being the first move down. Then we get a bounce like this. And then we get a bigger move down. So I'd want to see it move up through, say, 70, 69, 70 to get extensions out. All right, Amazon. Yeah, filled the gap. I said it was going to fill the bottom of the box. It just barely missed it, looks like. Zoom up on that. Yeah, just missing the top of, just missing the bottom of the box. Still likely to push to the bottom fully and overlap that gap that we got back here on earnings. Looks like it's up in the post just a little bit. So already did Tesla, Google. Yep, just traveling in the box here. It's got this nice fat range here. Just bouncing along. Like to come down and bounce back up, come back down until such time as it can break out or break down. Utility ETF, which one? Apple. Looking like so far it's holding the kind of holding the roadmap line area. Got a little bit to go before we get to see that was my primary, like maybe a bounce right there. So far looking like it might need a deeper retrace on down here. If it does that, we're probably going to take the S&P 500 down. So we got a little consolidation right back there. We may need to revisit it. All right, cat. Now look at that, going right to the target there for a double bottom. potentially an extension lower, which could, if it doesn't hold the 167 there, then it's probably going to extend down to 158, potentially 148. Somewhere in this area, if it breaks on down further, which construction not looking so hot right now. So all right. Forward. What's so special about it long term? Well, it's holding one of my favorite patterns. Remember that pattern I keep talking about, the measured bounce? Let's jump out to a monthly. Clear, clear, clear. So this thing, forward, being the thing, didn't quite get there. Basically, did the measured bounce setup. It ran off this low, came up, came back down, 618, reversed back up, created the entry right there. And now the extension happens to be way out here, way up here, around 150. Sounds crazy, but it works. Now, the more mild targets are going to be down here around 30, 40, and we're going to get another retrace and a move higher and a retrace and move higher. But the bigger picture pattern that it has completed sets it up to go to the triple digits. So that's probably going to take 3 to 5 years, though. Not going to be a fast move. All right, back to the daily. ASAN. Looking like it's chugging lower to me. Break down below here. You can see another extension lower. Yeah, 13 to 11 to 13 looks like. If it breaks down, it's got some work to do to break out. Got to get up back above 35 or so. All right, Costco. Well, needs to hold right here. If it doesn't hold here, it's probably doing that. This has been a corrective move up on Costco. Alrighty. Moving on. OXY. Yeah, I've been saying for a while it needs to retest that roadmap line, and it still needs to retest that roadmap line. About like that. Nope, moved the wrong thing. If you can get a bounce off the roadmap line, then we can start seeing some extensions higher. Overall bullish, but it's just not getting the retrace it needs to get the energy to go higher. Then XRT. Do a couple more, and then I'm going to wrap this up here. Been already longer than 30 minutes, if you can believe it. Yeah, get a little deeper retrace than the 618. That usually indicates that we may see an extension lower. LVS. Holding the roadmap line. Looking like it might get an extension lower. Be something like that. Retest the lows or extend lower. And AR. I've been warning about Bitcoin. I saw that comment there. AR sideways until it can get out of this funk here. It probably needs a retrace breaks back down, probably retrace to that roadmap line one more time before it can break out. And if it doesn't hold that, then it's going to go 1, 2. If it doesn't hold that, it'll extend down to there. Otherwise, upside target 56, downside target 25. All right, DVN and IBM, and then I'm done. So DVN, working on the breakout, 90 on the upside there. Might retrace to the roadmap line, but right now that's pretty bullish. If it can hold there and break out higher, it's already got the conservative entry. Looking for the move up. Primary would be 91 on that one. All right, and IBM, sideways, still sideways. Had a big sideways consolidation box, and it's still right in the middle of that. So continue that way. Upper end of the range, 146. Lower end of the range, 113-ish. Till the environment changes for tech, probably sideways. All righty. So wrap this up real quick. So right now, as you saw, I think the SPX is set up in what I call the measured bounce pattern. Now, you may not be familiar with what that is, right? What is it? Well, it's a series of Fibonacci price movements that occur in a particular pattern that, as I suggested, it moves up, it retraces at 618, and then we bounce. And looks a little something like the way the S&P is set up right now. Now, the entry is a move up through this line up here. And if you know how to read them, you can anticipate where the market moves next. Measured bounces are, well, it's kind of a heart and soul of echo trades, heart and soul of market roadmap trades, and a lot of the things I look for. I look for this pattern all the time. It's a pattern that really changed my life when I learned it. And they are a very, very powerful way to anticipate market movements and get ahead of potential trade setups. Some of the biggest trades I've made have been off of the back of these setups. UNG trade I entered back in January, start of February. That was a measured bounce setup. As I've said, S&P 500 is set up in a measured bounce right now. Would you like to discover how you can trade this powerful setup and learn all the ins and outs of it? Well, I have a ready-made class you can start right away, just as soon as we finish here. It starts with the fundamentals, the learning the basics of the Fibonacci trading in my 90-minute Fib masterclass. Then I'll give you the very code that I use on my charts with the Fib tools, and I'll give you all the settings right there. You can start trading the markets with my exact Fibonacci techniques. And I'll give you the Fibonacci trading workbook. This handcrafted workbook will walk you through everything you need to know how to put these tools to work. With a ton of bonuses, I expect you to come back to again and again. Plus, you get access to the Discord server that everybody wants access to, where I answer questions just about 24/7. So it's a complete package designed to help you start trading Fibonacci and measure bounces right away. Today, I'm only asking $47 for the whole powerhouse. If you're ready to join me, head over to jeffreytrader.com/fib or give my team a call, 855-454-0816. Here's the link under my face here, right here. So come check it out. Any questions real quick before we wrap this up? Any questions? So this also comes with anytime I do the class live, you get invited to the new live class. This is a set of 4 recorded versions we've done so far. I think it is. So any updates that come to the Fib class, you get those too. So $47 one-time charge for life. Where's the SPX go tomorrow? I kind of answered that. Like, it's a coin flip right now. All right, cool, Johnny. Glad to have you in. Yeah, thanks for coming, everybody. So let's stop the screen share and pop back over to my name. All right, so check out this video you might be interested in. Thanks for watching. Like and subscribe on YouTube, and see you again next week.